Today's cryptocurrency market faced significant upheaval, with Bitcoin experiencing a steep decline. Other stories include BlackRock's new Bitcoin product and Ripple's regulatory victory. Here are today's top 10 stories you need to know. The role of stablecoins in the cryptocurrency market is becoming increasingly critical, especially as USDT dominance has risen sharply in response to Bitcoin's recent weakness. This trend reflects a broader shift towards liquidity as traders seek safety amidst market volatility. In parallel, Ripple is advancing its efforts in the stablecoin space, particularly with initiatives involving the Mexican peso. The strategic importance of stablecoins is becoming evident as they serve not only as a medium of exchange, but also as a hedge against market fluctuations. As this battleground for stablecoins develops, market participants will need to navigate the evolving landscape. The future of stablecoins will depend on regulatory clarity and market acceptance, shaping the strategies of traders and institutions alike. Asia's regulatory landscape for cryptocurrencies is undergoing a transformation, with mixed signals emerging from different countries. In Russia, the central bank is advocating for restrictions on certain crypto investments, targeting only specially qualified investors. Concurrently, India is advancing a legal case against a crypto exchange administrator tied to sanctions and money laundering activities. However, Japan is moving in a more favorable direction as it progresses with a new crypto bill that includes a 20% tax rate and an ETF pathway. Additionally, Japan's largest banks are collaborating on a joint stablecoin launch expected by 2027. This regional dichotomy highlights the varied approaches to cryptocurrency regulation across Asia, with some countries embracing innovation while others remain cautious. As these developments unfold, the potential for increased institutional participation in the crypto market will be closely monitored. The landscape of tokenized finance continues to evolve, with significant advancements in banking and custody services. Deutsche Börse has announced plans to offer crypto custody and settlement services tailored for institutional clients, signaling a shift towards integrating digital assets into mainstream finance. Meanwhile, Coinbase's registration with India's Financial Intelligence Unit to provide trading services illustrates the expanding global footprint of crypto exchanges as they seek to navigate regulatory landscapes. In Spain, SecaBank has launched a MiCA-regulated custody platform, enhancing security and compliance for digital asset management. Additionally, DBS is preparing to introduce tokenized gold products for retail investors, merging traditional commodities with innovative blockchain technology. These developments highlight a growing acceptance of cryptocurrency within traditional financial systems as institutions adapt to meet the demands of a changing market. As these services become more mainstream, the tokenization of assets could lead to a more inclusive and efficient financial ecosystem, paving the way for enhanced investment opportunities. Digital Asset Holdings has successfully raised $355 million in a funding round led by the prominent venture capital firm Andreessen Horowitz, with participation from several major institutional investors. This substantial funding is primarily aimed at expanding the Canton network and enhancing the infrastructure for real-world assets, which is a significant step in the evolution of blockchain technology. The investment underscores a growing institutional interest in blockchain development, even amid ongoing market fluctuations and uncertainties. Digital Assets Initiative to advance infrastructure for real-world assets highlights the increasing recognition of blockchain's transformative potential beyond just cryptocurrencies, paving the way for integrating traditional financial systems. As the Canton network evolves, it may become a critical framework for bridging the gap between conventional assets and the blockchain ecosystem, facilitating smoother transactions and greater transparency. Looking ahead, the developments stemming from this funding round could significantly reshape the landscape of blockchain technology across multiple sectors, potentially unlocking new opportunities for innovation and investment. Mastercard has unveiled its latest initiative, Agent Pay for Machines, in collaboration with leading blockchain partners such as Aave, Coinbase, and Ripple. This groundbreaking development expands the narrative of real-world crypto applications by integrating blockchain technology into payment automation and machine-to-machine commerce. Historically, cryptocurrency has been viewed primarily as a speculative investment, but this initiative marks a significant shift towards practical use cases that can enhance efficiency across various sectors. By facilitating seamless transactions, Agent Pay for Machines highlights blockchain's potential as a foundational technology for modern commerce. As Mastercard continues to enhance its crypto rail capabilities, the implications for the payment landscape could be substantial, potentially reducing transaction costs and increasing speed. The move could accelerate user adoption of cryptocurrencies, fostering broader acceptance in everyday transactions. As businesses explore these new payment avenues, Mastercard's initiative may set the standard for future innovations in the payment industry, paving the way for a more integrated financial ecosystem. XRP has been gaining traction in the market, currently holding around $1.10, with traders closely monitoring its ability to reclaim the critical 113 cents resistance level. This surge follows a notable uptick in exchange-traded fund (ETF) inflows, along with the recent launch of Ripple's XRPL payment toolkit, which enhances developer access to the XRP ledger. These advancements signify a growing confidence among investors, particularly in light of regulatory progress that has bolstered the digital asset's legitimacy. XRP's utility as a payment solution is becoming increasingly evident, positioning it as a strong contender in the competitive cryptocurrency landscape. Analysts are now examining how XRP's momentum will evolve in response to these positive developments. As institutional products continue to roll out, XRP stands to capture a larger share of the market, potentially attracting more retail investors and partnerships. Looking ahead, if XRP can sustain this upward trajectory, it may not only solidify its market position, but also redefine the landscape of digital payments, making it a pivotal player in the cryptocurrency arena. In a significant regulatory development, Ripple Labs announced that the Securities and Exchange Commission has concluded its appeal concerning a court ruling on crypto oversight. This pivotal moment not only affects Ripple, but also sets a precedent for how U.S. securities law applies to digital assets, which have been under increasing scrutiny. The resolution of this case alleviates a considerable regulatory overhang for XRP, allowing it to operate with greater certainty in the market. This clarity could potentially pave the way for broader acceptance and adoption of altcoins, which have struggled amid regulatory ambiguity. As the crypto market watches closely, this de-risking event is expected to catalyze increased investment in XRP and related products, boosting investor confidence. Furthermore, with the litigation backdrop becoming less hostile, other altcoin projects may also find opportunities to flourish in a more favorable environment. The outcome of this case shapes the broader regulatory landscape for cryptocurrencies, influencing the actions of other crypto firms and regulatory bodies in the months ahead. The industry anticipates further clarity on compliance standards moving forward. In a notable development, BlackRock has launched its first Bitcoin exchange-traded product in Europe, following the remarkable success of its U.S. offerings that have amassed over $50 billion in investments. This expansion highlights a pivotal moment in the ongoing institutionalization of cryptocurrency, reinforcing the idea that Bitcoin is increasingly recognized as a legitimate asset class. Historically, Bitcoin has faced skepticism due to its volatility and association with speculative trading, but this new product signals a shift in perception among major financial institutions. The launch comes at a time when regulatory frameworks in Europe are evolving, aiming to provide clearer guidelines for cryptocurrency investments. As BlackRock's entry into the European market unfolds, it underscores a growing confidence among institutional investors who are seeking diversified portfolios. This could attract more capital into the cryptocurrency sector, potentially stabilizing prices in the long run. Investors will be closely monitoring the performance of this product and its implications for future regulatory developments. As BlackRock expands its cryptocurrency offerings, the landscape for digital assets in Europe is poised for significant transformation. Recent reports indicate that ETF-related flows play a pivotal role in shaping market sentiment. In a surprising twist, XRP-linked products have seen notable inflows, while Bitcoin ETFs are experiencing significant outflows amidst the current risk-off climate. This divergence suggests that institutional investors are becoming increasingly selective in their crypto investments, favoring assets with perceived stability or innovative potential. Franklin Templeton is reportedly planning to launch an XRP ETF, which marks a significant diversification of the institutional product pipeline beyond the traditionally dominant Bitcoin and Ethereum. This shift signifies a potential change in capital allocation towards more thematic and focused investments in the crypto space, indicating a maturation of institutional interest. The inflows into XRP-linked products may reflect a growing confidence in alternative cryptocurrencies, while the outflows from Bitcoin ETFs could signal caution among investors regarding market volatility. As we look to the future, the continued evolution of ETF offerings may redefine institutional engagement in the cryptocurrency market. With regulatory frameworks also evolving, the landscape for crypto ETFs is likely to become more competitive and diverse. This could lead to increased adoption of cryptocurrencies as viable investment options, reshaping the dynamics of the financial markets in the month. Bitcoin has experienced one of its most significant sell-offs in recent months, with a steep decline of approximately 14% to 16%, briefly dipping below the $60,000 mark. This sharp downturn has sent shockwaves through the cryptocurrency market, prompting traders to rotate into stablecoins for safety. In the wake of this volatility, the dominance of USDT, a prominent stablecoin, has surged to around 9%. Such a combination of a falling Bitcoin price and rising USDT dominance typically indicates a defensive market posture, as traders become increasingly cautious in their investment strategies. This sell-off can be attributed to various factors, including regulatory concerns, macroeconomic pressures, and profit-taking by investors who had seen substantial gains in previous months. Analysts note that the broader cryptocurrency landscape is showing signs of instability, with many altcoins lagging behind Bitcoin's movements. The current environment suggests a cautious setup as traders assess their positions amid heightened uncertainty. Market sentiment appears fragile, with many looking for signs of a potential recovery. As we look ahead, the crucial question remains whether Bitcoin can reclaim its previous highs or if this downward trend will continue to shape market dynamics. The upcoming weeks will be critical in determining if the cryptocurrency can stabilize or if further declines are imminent, impacting investor confidence and market liquidity. Thank you for joining us today. Which story shocked you the most? Don't forget to like and subscribe for more updates.